Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at Amazon on the daily, weekly, shorter term time frame, and we have a very clear tightening pattern reaching an equilibrium after the big pullback leading up into the election and the dump that occurred after the election. So we see the high of the bounce, the low of consolidation, lower high, higher low, lower high. Now the bulls are looking to form a higher low. So we had a bearish day on Friday. It was a lead bear, Amazon, and we lost that middle Bollinger Band support. But honestly, I'm not interested in any of the moving averages at this point. It's all this price action and looking for a clear break. We can see the volume continues to taper off as we get tighter and tighter. I'm looking at this support of 754 and this resistance of 774.39. So essentially a $10 range. These moving averages will be key as resistance. You can see the Bollinger Bands are tightening up as this range tightens up, and we are going to see a clear break. If we don't see it this coming week, we should see it absolutely to start the new year, and it will give us an indication as to the short-term direction on where to be looking for Amazon. So the weekly time frame shows this tightening range as well. We are rejecting from this middle Bollinger Band resistance. We were able to close over it, just over it, on the original bounce attempt, but now that resistance of 778.63 is rejecting the past couple of weeks, and the range is getting very tight. We have an inside candlestick to watch on the weekly time frame, but whenever the daily range is this clear, we don't even really need that inside weekly candlestick as our guide. We have these support and resistance levels of previous price action to be watching. So I'm absolutely very interested in Amazon for this purpose, and watching to see which direction this trend breaks is going to give a nice trade in terms of a swing position to start the new year. So we'll be watching Amazon very closely. Let's look at the shorter term action on the 5-minute time frame, which saw all that weakness right out of the gate on Friday. So there were a lot of low volume names on Friday, a lack of trading opportunity, but not for Amazon. The bears rejected first thing from 5-minute resistance, and then the exponential moving average resistance rejected the price all morning for 2 hours to the downside before we hit the low of the day down at 757.99. So a big time pullback. Then the bulls showed up. You can see the volume for the first time. The bulls start to see some upside. First time we see 3 green candlesticks in a row on the 5-minute time frame. And then from there, they did see some nice little higher lows and higher highs. Certainly not a significant turnaround for the bulls, but an oversold bounce. The 5-minute RSI got down to 24. So on the hourly time frame, we are losing some moving average supports here. And let's zoom in to the 2-day chart for Amazon. So you can see all hourly moving averages are resistance at this point. Let's take it back a little bit to the 10-day and see that we had that bounce. And really, let's zoom it all the way back, because you can see on the hourly time frame the tightening range that you see on the daily time frame, where you have your clear couple higher lows, lower highs, and that tightening range continuing to form. So we'll be all over Amazon, taking it one day at a time and watching patiently for this break to occur. And we'll be looking to see which direction Amazon is headed to the short term. If we break 754, we're looking down at 736.70. And if we break 774, we're looking at these moving average resistances and 782. So just looking at moving average support and previous price action, I would be hoping for, as a trader with no position and no bias, I would be hoping for a bearish break because there is some more room to the downside. I think it would be easier for bears to see some nice swing trade gains on a bearish break due to the lack of support and the lack of moving averages than it would be to see a bullish break. But that is just by where we are set up with the weekly moving average resistance, the middle Bollinger Band, and all these levels here. So we'll see how it plays out. We'll check back in as it goes down. I hope you have happy holidays. We'll see you soon.